Hey guys, what's going on? Happy Sunday morning. So we need to get ready for next week. It's going to be very volatile, I think. It's going to be very exciting. Just make sure you have cash and you should be all set. So I'm going to get into why I think the beginning of a stock market correction is happening. Before I do that, make sure you like, subscribe, comment below. I made a video on my market prediction about 10 days ago at this point. Seems like I'm onto something. It seems about spot on from what I said 10 days ago. I'll put that as my end screen at the end of this video, just in case you want to check that out. But yeah, so if you could subscribe, I really want to try to get the 500 subs by the end of this month. I really think we can do it. It literally takes 5 seconds to find the subscribe button and the like button. So if you guys do that for me, much appreciated. It makes me want to continue to make these videos. So let me get into it after saying that. So stock market beginning to correct. I really think it's at that point, and I think we're seeing this for a lot of reasons. I'll start here. I made a couple bullet points of why I think that. I'm going to try to make this video under 10 minutes, so I might not elaborate in detail as much as I should. But if you have any questions about any of the bullet points, comment below, and I'd be happy to answer for you. So evaluations matter. So I'm really a growth investor and long-term investor. If you look at most growth stocks or tech stocks or, really anything in the growth sector, everything is super overvalued. That's like a fact. If you run the numbers even 5 years out, the market cap seems crazy right now in most of the companies. So everything was overvalued. If you've watched my previous videos, I wasn't buying the first 6 to 7 weeks of this year because everything was nuts. It was just running up, and the valuations just didn't make sense. So I didn't buy a thing. NASDAQ. So most of my stocks that, especially my big four that I make every Saturday morning and a bunch of positions I'm in are mainly NASDAQ stocks. The NASDAQ in the past month went from 14K to 12.7K. That's a 9.2% dip in a month. That's substantial. So when you're in high growth stocks, multiply that number by 2 to like 4. And that's really what your growth stock's getting hit in general. So when it goes up, you make a lot more than what it does. And when it goes down, you lose a lot more than what it does normally. So my stocks got hit anywhere from 15 to 25%, which is why I've been buying actively. I make videos whenever I buy stocks. So that's another reason you should subscribe if you're in my stocks. You get kind of updates basically the same day when I bought it. So, and why I bought it or the reason or whatever, or how much of a percentage I bought in. A lot of YouTubers say they buy stock and they throw like, oh, I bought 10 grand, 5 grand, 1,000. But like, you really don't know how big their position is. So you really can't gauge how much you should buy in. So what I do is I actually do the percentage of what I bought in of my total amount. That way it gives you like for your personal record, if you have $1,000 and I put 10% in, okay, I put $100 in that stock to add up or add down. So I like that better because then everyone can kind of get a gauge on why or how much I put in based on the situation. So that's what I do, and I think that works better, and nobody else does that. Or I haven't seen anyone do it. So NASDAQ got smoked. Past 5 to 7 days especially. I think I've bought 5 or 4 of the last 7 trading days just because the deals, mainly because of this. It's been crazy. A lot of good buying opportunity as a long-term investor. You just take advantage of these deals. Why I think the NASDAQ is crashing and all, the market in general, everything's overvalued. I think things are coming back to reality. APR rates, they're going up actually. If you look at some like mortgage lenders and stuff like that, the rates were as low, 30-year fixes were as low as 2.25 to 2.5. Like that was like a couple months ago. That was like the norm. They're going back up to 2.9 to 3.25 right now. So as the rates go up, I mean, it kind of stretches people out. I think, they're kind of coming to reality, like money isn't as cheap to lend just in general. So when that happens, the market pulls back. Last stimulus package, most likely. So obviously the current president and administration, they said they're going to offer a stimulus package for people that make under $70,000. It's going to be $14,000 per person, then add a bunch more if you have kids or whatever. So I think this is the last stimulus package. And now that the market realizes that, the market prices things in months out or years, or like months out, right? Let's just say. Well, they know this is coming in the spring and they know this is probably the most one. or the last one, excuse me. So I think what's happening is they already priced in that stimulus package. So now that that's priced in, there's probably not going to be another one. I think more people are like, whoa, 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 we already priced that in. So nobody's pricing in a second or third one. So that's why I think the market's pulling back too. That's another one of my opinions. New investors, a lot of people got into, investing last year on the crash, about a year ago at this point. Robinhood, Webull, they made, these apps made it like a video game, or like, they made it investing fun. So like they would see top sellers, big growers, like it just made investing more fun for younger people. And I think now that they haven't experienced a correction or a crash ever, they're panic selling. So that's also driving down the market. People are freaking out, and that's making the market go down. I think that's going to continue to happen the more red it gets. But if you're a long-term investor, you look at that as opportunity because you're already in good companies, right? So you want to take advantage of this. Like don't get caught up. If you are a new investor, if you buy positions that you truly believe in long-term, just stay in and average cost down. It's not a big deal. You want that to happen, actually. If you buy stock and it keeps going up, the problem is you can't build a position. So if you can't build a position, it's very frustrating. Whereas if you buy a position, you like the valuation, it goes down, sweet. You got a better buying opportunity. You're getting on a discount. So new investors, I don't think, can grasp that concept, or you need to mentally prepare yourself for things like this, and they're not mentally prepared. So I think that's part of the reason. Everything in the market is priced to perfection, just like evaluation. So when you run evaluations, you see what these companies you think they're going to do 3 to 5 years out. Their market caps are insane. Like there's no way they're going to do that. You're pricing them to perfection. Earnings. You've seen a bunch of earning reports come out in the past couple of weeks, and basically every company that I'm in, the earnings were great. Literally amazing, exceeded the EPS, the revenue, the growth, they over exceeded everything basically. Well, the stocks aren't going up anymore because they're already priced into perfection. And if they have the littlest thing go wrong or one negative thing, even though it's a minor thing, the stock goes down even after an amazing earnings report. So everything's priced to perfection. That's why I wasn't buying the year. Earnings were coming out. The stocks were actually going down or staying the same on amazing earning reports. Like that just shows you how overvalued they are. So I didn't want to get near that. Let me see where I'm at here. Sorry. Let me see. So we are at 7 minutes. Okay, perfect. So yeah, so that's price perfection, earnings. I think things are coming back to reality. Another thing is that I think long-term gains, so long-term capital gains. So you had a lot of companies and wealthy people when the market was dipping last time this year. What people were doing with a lot of money, well, they were putting their money in places where there's a lot of opportunity, right? So when you see the market correct 30, 50, 60, 100%, like, when you're getting stocks half off, like literally where they're at. Like I remember, what was a good one? There were some crazy ones. Example, I'm in CCL, Carnival Cruise. CCL at its peak, don't quote me on this, you might have to do your own research, but this is really off the top of my head. I believe it was at $65 or $70 a share last spring. 2 springs ago, last spring during this crash, it went down to like $7. And this is sheer luck, I'll admit it. I bought a bunch of shares because they could have gone bankrupt at this point. I bought a bunch of shares at $8.15. Literally an hour later, the Saudis bought about 10% of CCL, and the stock just went up to 12, 15, and now it's at like $25, $26. So I have a cost base of $8. So long-term investors, they might have did that, and now their long-term gains, you get taxed way less, which is another perk of being a long-term investor, especially if it's a lot of money. So, they're taking their positions and they're taking their money and putting it elsewhere now because everything's overvalued. So you see the market's correct. And that was my whole point of that. So people are selling big lump sums of money because now they're in long-term gains. Everything's over. Evaluations are insane. They're taking their money and running. They'll wait for the next crash dip or put their money in bonds or whatever they want to do. Market predicts 6 months out. I already said that. So that's why I think the market is correcting now, even though everything's good as far as earnings. As the market keeps correcting down, which I think it's going to do the next couple of weeks or months personally, I will add more and more to my positions that I currently have. I added 5% 2 weeks ago to each position that I liked. I added 8 to 10% this week as positions kept falling. I will more aggressively add to booster my position. So let's say it drops, the Dow, let's say the NASDAQ drops another 5% next week. I'll probably put 12 to 15% more into each of my stocks that I own that I love. I was really focusing on Tattoo Chef and Corsair Gaming last week just because they got smoked. So I definitely want to drive down my cost base. Currently, I'm 28% cash heavy. I think 2-3 weeks ago, I was close to 35%. So I've been slowly just nibbling in these positions because I don't think this it's not even close to being over, in my opinion. So I want to make sure I have cash ready to deploy on good deals. So that's all I got. Like I said, let's try to get to 500 subs by the end of this month. Make sure you like, subscribe, comment below. Let me know your thoughts on all this and if I'm crazy or if you agree with me. But in short, I think this is just the beginning, and just have cash on the side and invest in good companies. Peace.